Okay. Uh,
Um, no, I haven't seen that. What was that? Triggering us an ETF triggering a sell-off in the Nikkei, or
I don't know if it's it says C Bank. It's right on our front page on our live squawk news. Japan's ex-vice finance minister Muto unwinding C Bank's ETF holdings could trigger sell-off. BOJ has no choice but freeze them for time being.
okay? I'll look that up. I don't know.
I don't
Um,
know if C Bank, if it stands for city or it's another
no,
bank.
no, 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 no. I don't think so.
Okay.
I
Uh,
think it goes on to say sees high chance for yield curve control and negative rates to be scrapped as early as April with eye on outcome of 2024 spring wage talks. So
Yes,
okay.
I saw that. I saw that earlier. It's another former this and former that and ex this, which you don't really pay attention to. It's all well and good saying this stuff when you're not in the hot seat, but they never say it.
right, exactly. Like it's the armchair quarterback we call it, you know.
Yeah, exactly.
So, Ryan, how are you today, buddy?
All good, mate. You?
Okay. Is it significant that we're back under 109.60 in euro? Or is this a
Yeah,
dip to buy?
it's short term significant. We couldn't crack it, we couldn't hold above it, we couldn't get above 110. So the only other way it can go is down. The fact that we're holding 109.10, 109 even, which is a bit of a level when we came up. Um,
Yeah.
we had the first break and then we couldn't get through 109.10. It's just a minor pullback at the moment until
Okay.
it's something more. We've had a 2 month trend where it's done 500 pips. So a 70, 80 pip pullback, that doesn't mean the world's collapsing just yet.
Right. Okay. Um, I'm looking for a dollar rebound here. I don't know. We could also just wash out to 100, right? But um, trying, and I think that's going to be the last bus stop to get shorts off. Maybe around 105 would be halfway back.
Yep,
You
I'm
think
with you
that's
in that.
viable? It could
Yeah,
happen.
we've had a little bit of a shift of the market eye of Mordor. It shifted from jumping up and down over Fed rate cuts to what's happening in Europe, especially after all the CPI data we've had. So everyone's now trying to guess when the ECB are going to cut and all that sort of stuff. So you know how these things happen, Dale. The focus has been on the US and the Fed for the last couple of weeks.
Yeah.
Now the focus is on the Eurozone. So yeah, the dollar could rally a little bit. I'm still expecting them to maintain the hawkish line and higher for
Yeah.
longer, and jobs not done yet. So yeah, we've got NFP next week. If that's a good number, dollar probably gains, and then we got obviously Powell tomorrow. If he says something to keep the message in play, dollar yields rally, and then we have the Fed, and then but I think then you get your spike in the dollar, and that's the one to hit.
Lean into. Where's he speaking tomorrow, Ryan?
He's got a double appearance. It's the same event, some college, I think. He's doing a
Oh,
fireside chat, and then he's doing a panel with I think Bowman or one of the other Fed heads. So
okay.
yeah,
Do you know if he's going to go to any of the frat houses and join the keg party?
toga,
What's he
toga,
find?
toga.
Maybe a panty raid at the sorority house.
Bit of beer
Anyway,
pong.
oh, I didn't say that, did I? Anyway, okay. Aussie, you know, I still think I'm going to have a chance down here at about 4.5 or so. I want to buy it because I mean, look how it threatened this channel just being turned back right there.
God, I hope you're right, Dale.
What, a pullback down there, Blake?
Oh yeah, I mean I shorted at the 200-day moving average, so I've been
Okay.
short all week. Yeah, or
Okay.
since the inflation data.
Okay.
Yeah.
Well, let's see. The 9-day is coming in where I didn't do the fibs on it, but I'm just eyeballing 64.30, 64 and a half. Here, Blake, I'll make it happen for you. Ready? One, two, three. Everybody, cursor on the Aussie. Down.
Yeah,
Look at
I have we have a lot of traders, Dale, in our chat room, and they try that all the time because you taught them that
really?
trick, and it doesn't always work.
Oh,
But
darn.
And
Anyway,
now you messed up your screen.
yeah, I did.
Well done.
Anyway,
Hey, Dale, by the
Yes.
way, C Bank is central bank.
oh, okay.
So,
All right.
of course, if the Bank of Japan would start to sell their ETFs, of course the market is going to collapse, but they will never do it. So, I mean, skip that. Move on. Skip that story.
All right. Okay. So it's so they just freeze them,
Well,
right?
yeah. I mean,
What's that mean?
how can Bank of Japan start to sell their ETFs? And unless, I mean, the market goes all I mean, global economy goes all booming, and the Nikkei rises to 40K or above, and everybody wants to buy. Then they can build up a little bit. But I mean, that is one of those that Bank of Japan will probably sit on for the rest of their existence. But they
Okay.
haven't bought anything in 2023. That's the message that the guy did not give. They
Okay.
didn't
So
need to buy any.
they've had a good year
On that side, yes.
because of what the Nikkei did
Well, on
last year,
those
right?
ones, yes, but the rest is a different story.
Oh, the JGBs, you mean?
Yeah, JGBs, whatever they have in reserves or so, that's a different story.
Okay. So Blake, why don't you take the charts and I could try and figure out.
Oh, no,
What I
well,
did wrong.
okay, so just go to your cursor down to the lower middle of your screen. Just kind of move up a little bit. Okay. Then hit
Okay.
that circular right there. Hit that. Is that not?
That
Oh,
doesn't-
then you know what you have to do here. Hold on. I'll take it and I'll show you.
All right.
And then we'll just go from here. Give me
Okay.
1 second. Dale coming over.
He's going to charge you for this, Dale.
Yep. There's some
the
one-on-one Dale chart coaching. So what you probably did is you probably grabbed one of your panes, if you can see here,
Oh,
and you moved. Whoops, let me move this one. You probably moved a pane like that. You have to just move it down. And what you can also do is go back. Just hit this back button, undo, and it'll undo everything. Just keep clicking the back button until it fixes it.
Thank you, bro.
Yeah. Well, good morning, by the way.
Morning.
Hope
Good morning.
everybody's doing great.
It'll be $50, Dale.
Yeah. So you could,
Look,
if you
I
can leave
pay
a
for
quarter by the
everything.
toilet, that'd be awesome, Dale. Thank
All
you.
right, buddy. You got any cologne?
Yeah, yes, and yeah, and I'll give you a mint too while you're at it. All right. So yeah, Dale, you're a clubber. I know it. You know it. All right.
I think I remember.
Yeah, all right, so let's talk about the euro real quick, and let's talk about some of the economic data that came out. So Ryan, how bad was the European data overnight?
Well, describe bad. Good for the ECB.
Yeah, good for us shorts. Those of us short the euro is good, and those of you at 109.90, good. But what's the data telling us today?
If you look at the Eurozone CPI numbers, that tells you all. Headline CPI now down to 2.4%. Just at the bottom of that screen there. Yeah, core coming down to 3.6%. So big drop start we saw in Germany. That headline 2.4%. It pushes it, very, very close to the ECB's target. Another print like that, and we're under 2%, and then you probably get the market panicking that inflation is going to keep going, and they still won't hit their target on the other side either.
Yeah, and so this has been my argument. Really, I guess we could probably just talk about it. It's just been the general consensus here. Look, if the U.S. is exceptional, let's just call it that. I don't know if we live in a world where you're going to have our growth here in the U.S. slowing and Europe not slowing even more or further, or if inflation is falling here in the U.S., then you're not going to get that, heading around the globe worse, in my opinion. So this is why I think the US dollar, you have to be a buyer on dips, and you have to use these as opportunities when you see these moves out, out towards the euro, for example, to be on the other side of the trade. So, and this was a really good setup going into this month. And I'm not saying that it's over yet, because we obviously have to get beyond the end of month data that we've got that's coming up, or end of month flow, excuse me, that are coming up today. But this massive US dollar selling that has been widely telegraphed in the market, has probably been front run by every bank going into the last week and a half. So as a result, this overshoot towards 110 and above resistance was probably the big enough catalyst to drive, dollar bulls out of the market before reversing. Now, I also want to show you guys something that I found relatively interesting as of this weekend, and I didn't want to talk about it until the next week ahead video, which will be over this weekend. But if you look at some of the data that's coming out regarding the commitment of traders data. Remember, the market's still long euros, and they got more long euros over the last couple of weeks. So instead of the euro, non-commercial speculators, really capitulating, what they did is they took this dip in the euro to get long, euros or more long euros over the last couple of weeks, which I think, we have to pay attention to, because you had some of them, exit as the euro was, falling. But, when the euro is, bouncing back here, that you see like that, you got a lot of those that are like, well, I still think that the euro is going a lot higher. So, there's still a lot of speculators that are very long the euro at this point. And if we do see a reversal here from 110 and we trade back below, like, let's say the 200-day moving average or the 108 level, you're going to have a little bit of a positioning issue. One of the other things I wanted to talk about, and this goes with the broader markets, is, you have FOMO, and this is something we discussed yesterday in the private ForexAnalytix shows, the morning edge and the daily roundup and things like that the last couple of days. FOMO's a thing, and it's a real thing. You take an asset manager that's like 35 to, let's just say, 50, right? A relatively young asset manager with a huge book that, Dale, you've talked about quite a bit, that hasn't been through a lot in the markets, right? Yeah. If you look at the market this year, we're up 18%. From the beginning of the year. So January 1st, let's say roughly here, we're up about 18-20%. Okay. So if you don't listen to like podcasts and macro stuff that, I listen to them. I do it while I'm doing analysis overnight and filling out all the analysis from, throughout these 30 instruments every evening. What I'm usually doing at the same time is listening to some sort of, economist. And there's a lot of smart people out there, but the chorus of economists over the course of the last year has been, we're going to have a recession. The end is coming. There's a lot of negativity, and people have been calling for the U.S. economy and other major economies to just roll over and die. It was going to be a real tough year. So you got a lot of people that are probably poorly positioned this year, and then you have a market that's up 18% at the end of, coming into year end, that have just basically been forced to chase the market. I mean, if you're only up like 7% for the year, and the market's the broad market's up 18% of the year, you are chasing, you are putting money to work, and you have to, try to produce some results, or you're at risk of redemption going into next year. So now what could really mess up the entire market is if we actually get a reversal from, the 4,600 level, which in my opinion is a big long-term, triangle that, we've been noting that this is probably really key resistance in a very, very long-term consolidation. What happens if we lose 5 or 6% in the month of December? And everybody that, you know, was caught chasing is caught on the wrong side again. And I think that's like an issue that we're going to be facing going into the beginning of December. Anyway, this is going to be a really, really tricky month, and I think volatility is going to be increasing. But just some overall, like, you know, high level thoughts of what I think is going on. But Ryan, what do you think? What are you thinking here with you know, end of month flows and everything that we've seen? I mean, we've seen the euro really come off. Do you think it's going to continue?
It's possible. You know, the world and his mate were expecting dollar to get sold this week. It's been sold this week. It seems to have dissipated now. We didn't see much of a move in dollar yen in the Tokyo fix. So yeah, I can see that there might be a bit of a dollar bounce coming. You can't tell what's going to happen later. You know, the London fix, we might get something, we might get not. In the same way you're warning over the S&P, I'll warn over people getting too bearish over the euro, just because we've had, as I say, you know, 70, 80 pip dip from the highs. You know, we've spent 2 months going up. You don't turn around a trend like that in one day. And that wasn't all every month stuff either. So there was something structurally changing in the price action why we rallied so much. So yeah, watch your levels. If you want to short the euro, fine, but pick your points, pick where you want to short it, and lean against the levels. You know that could be here at 109.35.40, which was an intermediate level. It could be at 110, could be at the prior highs. You don't want to get caught shorting in no man's land. You know, so you either wait for a little bit of a rally to short, or you get a break of 109, 109.10, and you try a short that side.
You know, I think that's really important. I'm gonna show you guys something. This is a conversation we had yesterday. This is in our chat room, and I want to. We were having this conversation yesterday, and I said, if you like your US dollar shorts, getting long the euro dollar here because we are at 109.60, is with a 20 pip stop is the best intraday setup. I'm like, I'm a US dollar bull, but I'm just throwing this out there. And then, you know, and obviously, you know, with the chart as with us trading at 109.60, and Ryan chimes in, says, I'm looking to take profit on more of my 109.70 break trade and another run into the 90s. I've seen, I don't like the price action right now. The highs are getting lower. And then a few hours later, when we rallied up towards the 109 level, or excuse me, the 90s, I said, hey, you know, like Ryan said, now back in the 90s maybe is a good place to take longs off here intraday. And that was at 109.90 before we dropped, you know, going into the close yesterday. But those are the types of conversations that we have in our chat rooms, because, you know, when you're trying to navigate through intraday, it is, you know, you need, you know, have conversations of people talking about what is going on at that very moment. So I hope that helps traders. K-Man's really good at helping navigate traders throughout the course of the day in our rooms as well. Speaking of which,
I got out at 88.
What's that?
I got out that trade at 88.
That's awesome. And that was like late in the afternoon. And, you know, that was a team effort. You know, we're all sitting there, you know, navigating through all of this, you know, you know, as we're holding these levels intraday, all these little intraday moves that you see throughout the course of this level. It's being able to scalp in and out of these levels that you're talking about. So let's go to K-Man real quick. K-Man, what are your thoughts going into month end here? Because of, you know, all the over televised month end flows. What are your thoughts?
Yeah, it's one of those shows where you hear a lot about in the ads before it happens. I said yesterday, I think up to yesterday, a lot has been done, but we have to know that a lot of those FX neutral funds and stuff, they will be benchmarked against today's fixing. So there may be some left to do, which is perhaps what is slowly coming through in the market as New York comes in. But yeah, I think on the basis of those European data as well, they are catching up on the US data. And we were talking about it on the flow show. If you look at the CPI, European CPIs are actually moving faster than the US CPIs, up and down. over the past 3 years. So now they are actually moving very fast to the downside. I reckon, yeah, euro should be offered at some stage. And I think perhaps if you get this last gasp into the 4 p.m. London fixing, there will be a lot of people waiting to counter that. Whether it be on the euro dollar, whether it be on a cross somewhere. Yeah, I'm looking at. I'm already short euro dollar, but from yesterday, as people will know in our room. Yeah, yeah, and I think euro is bound to come off a little bit.
You know, Keyman, I was thinking about you last night. It was late. And it's not the kind of thinking about that you think that I was thinking about. So don't think those things.
I'm not thinking about
you
what
bunch
you're
of perverts.
thinking, Blake, don't worry.
It was funny because it was you know, I'm obviously I'm up during Asian hours and I'm trying to disengage from the computer because when you've been on the computer for like 15 hours straight, it's like, okay, I need at least 3 hours of like not dealing with the markets. And if you look at the hourly charts in the Aussie ripped higher in Asia because of the end of month flows. And you know, you talked about it the previous evening. We got it last night as well. And I'm like, I guarantee you when I get up in the morning, the Aussie is going to be a lot lower. And, you know, but you're getting those, you know, the Tokyo fixes and the dollar selling coming through. And then, you know, those are done and then the market rolls over. And then you had obviously the euro data compounded, you know, dollar strength at that point. But I was thinking about you last night because we've seen it the last 2 days, really.
Yeah, there's one that I'm really how shall I say, disappointed about because I thought, you know, we were talking about that dollar rand and I was really looking
me
at that
too.
to actually come off a little bit like the rest of the dollars into month end, but nothing of the likes. This thing is just like going up and up and up. And
It's
I'm
buoyant,
afraid
right?
we'll
I
have
mean,
to
if the
pay
dollar
up.
really starts to break out, like you know, let's say the euro heads back to 105 and you see, I mean, what's going to happen to the dollar rand? And I don't know if you guys are following it, but this is, you know, I'm not talking about Ryan and K-Man because you guys already know. You know, I'm long dollar mex, but I'm playing this triangle and I'm playing off Banxico's big news from like, you know, back here. Back earlier this fall, I'm, you know, trading counter trend and this dollar mex is taking off too. I mean, what if the dollar mex makes it above 18? The dollar rand's going to be in breakout territory if that's the case. So it's just something that yeah, it's all developing. Anyway, hey, we got PCE coming out. We should discuss that. It's going to be really important data, but we have weekly unemployment claims and we should be really watching these continuing claims because that's the number that has everybody on edge right now because they're getting a little bit perky. What do you think, Ryan, with the unemployment claims and PCE that's coming out? How's that going to factor into this dollar, the dollar end of month flows? Do you have any thoughts here?
Yeah, well, I mean, we had a little bit of relief in the jobless claims last week, didn't we? Especially that continued claims, it fell back a bit, so a bit of relief pressure. We'll see whether it gets back on the prior trend of creeping higher. I don't think we need to worry until it starts getting over 2 million, but we need to keep an eye on that. PCE is always a tough one because, yeah, it might be the Fed's preferred measure, but the market moves on the CPI. So as long as there's no real shocks from there, then I think it shouldn't be too much, unless it comes in a bit hotter than what the market's expecting. If it goes the same way as CPI, either a little bit softer, then that probably won't do much. But if it doesn't drop as much, then again, that might give a little bit to this short-term dollar rally that might be coming.
All right.
Hey, Blake,
K-Man, go ahead, Dale.
Do you have TLT? I just want to point something out on TLT. You could pull it up. There was, if you look left on TLT, thank you. Back to October, it filled the gap yesterday. September, see that gap down? Yeah. So I know.
Well, you know, I'm Dale. I'm glad you brought that up. you know, because I want to say that one of the things that really has my attention today too is if you look at Boons, you know, this is the chart. This is in the chat room from this morning. We've been targeting the 200 DMA in Boons, and you know that data may have capped us overnight. That CPI data. Now that we've reached the 200 DMA, and then also alongside your TLT, if you look at the 10-year, we hit the 78% retracement, which I feel is pretty big resistance, and you know may end up capping the market now, which would mean that if this is truly filling the gap and we're done filling the gap here, we might see U.S. yields start to come back here. So
now they say
yeah, I mean,
the stat I read yesterday was this was the best month in bonds in 40 years.
this type of volatility that we're seeing in the bond market is not normal.
And it doesn't look huge, but that's the best in 40 years.
Yeah, yeah.
Post
I mean,
rally.
it's wild, right? All right, hey, K-Man, PCE weekly unemployment claims. I'm gonna get set up for it. What are you thinking here?
Yeah, unless there is a surprise on the PCE, I don't think that today is going to be the major mover. I think we're in end of month. We know what's going on. The one thing where we should pay attention to though, and perhaps the PCE can accelerate it if it comes in a lot lower than expected, is the bond market, because we are in the end of month, and there was also a lot of talk about big rebalancing needs. So they may push actually the yields even a little bit lower, or the bond market a little bit higher, and then we will have to see how that translates into the start of December, and what Powell will have to say. So I think for now we may actually go and visit an extreme on the low side of the yields, and perhaps see a bit of a rebound in those yields to come tomorrow, or past today's whatever deadline they may have on this rebalancing. So there's a bit of quite a few moving parts here to take into account for the rest of the day. But whatever happens, I don't know really about the rest of the dollar pairs, but there's two on my radar. That's euro dollar and dollar Swiss.
All right, US dollar. I'm sorry, euro dollar and dollar Swiss, and the dollar Swiss has been trading very.
Swiss was also one of the currencies that should have done well into month end, and it is doing pretty well.
It has, yeah. The dollar Swiss is trading really heavy for sure.
Yeah, but that could all reverse once come 4 p.m. London time.
All right, we've got about a minute before this data comes out. Dale, you have any final thoughts here?
No.
FOMO. We're less than a minute. To the left, we got dollar index. We got
I
S&P
dreamed
right
about
here.
K-Man last night. That's it.
What's that? You thinking about K-Man too?
I dreamed about him.
You dreamt about him? You pervert.
Yeah, you thought about him and I was dreaming.
All right. We got 10-year yields over to the right, dollar index. I know I probably shouldn't even keep it on the dollar index because it's going to just, move along with yields here, but it doesn't matter since we got the PCE and weekly unemployment claims and continuing claims that you can see right here on Data Flash. Remember, this is all included with ForexAnalytix. We got S&P right in the middle here, and we're going to watch the reaction. Should be out in just about 10 seconds or so, 15 seconds. So stand by, folks. It's going to be a busy one today. And then don't forget, tomorrow we have Canadian jobs report, which we'll be covering here live as well. So here we go. Canadian GDP is out. S&P is coming off a little bit. Dollar's getting a bit. Jobless claims are better than expected. Continuing claims, not so much. So you guys see the PCE data yet?
No.
Softer than expected. 3%, 3.5 on the core. So as expected on the core, a pip better on the headline.
All right, so dollar's a little softer following that PCE, but we'll see. We're going into, like we've been talking about, we're going into, month end, and it's going to be really, really busy. Oh, look, I've got some alerts coming up. I need to be doing something. All right. And unfortunately, I'm not going to be able to get triggered because I didn't have an order out there.
Look,
I was trying to
the
get
euro
shorts.
went to 960, the prior fib, close enough, and came off.
I just wanted to add more at the 50 level, but it's so fast following the
It was
data. It's
fast.
just, yeah, it is quick. All right, guys. Well, I know you have your guest here, Dale. So
Yeah,
I'm
Fabi's
going
here.
to, yeah, I'm going to pass it off to you. Have a great one, everybody. Thanks for joining us today on the F.A.C.E show. Don't forget, tomorrow we'll be covering Canadian jobs live. We're going to cover the Canadian response because that one's been quite a mover as of late. And K-Man, glad you got to sleep in a little bit this morning. I love when that happens on accident for myself too. Ryan, thanks for keeping us in check. And Dale, thanks for guiding us every single day.
Well, thank you, Dream Team. And now you know why I call us the Dream Team. I dream about everyone.
That's still that
team.
creeps me out. Creeps me out a little
All
bit.
right. Well, anyway, get over it.
All right.
Anyway, welcome back, Fabi Lara. How are you?
Hey, I'm good, Dale. It's nice to see you again.
Nice to see you. I started keeping tabs on one of the stocks that you recommended.
Uh-oh.
So here it is.
Now I have accountability too, man.
Yeah, look at that montage.
There you go.
You were talking about that. I don't know, what was it, that the gold that they had in hand made it worth, what was?
So they have a study out that points to basically what we call a resource, right? In the ground resource of gold in I think it's 1.5 billion range. It's definitely more than $1 billion worth of gold in the ground, and that's already like that's the NPV, so it's already cash flow discounted and adjusted, etc. And these guys are extremely on the ball. They have kind of done the same thing before, I think, also in the same region, and they've been able to sell their previous company for over $1 billion. So these aren't exactly cowboys, and they were trading I think at the time for like 150 million versus, the 1 billion that they have in the ground. And, since then they've been advancing the project. You've seen a lot of mess in West Africa with Niger and their coup, and there's Burkina Faso and all the attacks that are happening there. And the region that they're in has actually, so far, fingers crossed, been completely unscathed and protected from all the chaos. So yeah, they're still I think they're still a good bet.
I think that it's interesting, and people should think about that if they do their own research. The jockey is important, isn't it, Fabi?
Absolutely.
And the management.
And it's even more important when you're talking about mining, in my own opinion, because what you're doing is such a difficult type of project that the geology needs to be right, the jurisdiction needs to be right, and the management needs to kind of foresee the problems that they're going to have and try to lower the risk as much as possible. I mean, if you get somebody who's not really serious and doesn't have massive skin in the game, which this team does have, quite a bit of shareholding. I can't remember the percentage, but they do own quite a bit of shares. Then, at the first trouble, the guys just can't advance the project. And so it doesn't matter if you have gold in the ground, if you can't pull it out, it's worth nothing.
Yeah. And, a lot of guys aren't on their first deal. So they actually have track records of companies that they've developed from the ground up, that they've sold, and they do it again. There are also some CEOs that are diluters.
Yes.
You want to address that? I mean,
yes.
one that I know of, having experience in its equity, is McEwen. How many reverse splits are they going to dump on shareholders? So if you know a guy's willing to dilute to finance things,
I can barely keep track. Here's the issue, Dale, with mining stocks in general. And this is why you kind of have to tread carefully when you're talking about a mining company or project. You're looking at it and you're thinking, okay, financially, this has legs. But the problem is that that company will not make a cent before they have already proven to the market that they have something worthy of financing. And then they actually have to go out there and get the financing, which means that dilution is absolutely essential for them to keep the lights on. And it's kind of a function, it's a function of value versus time, right? So the race, for the jockey analogy that you mentioned previously, the race is that the jockey needs to run fast enough and add enough value to the company faster than they need to dilute, so that by the time they dilute, they've already added more, advancements to the project. Because if they catch a bad run, if something happens to their jurisdiction, or if the market just, isn't the best for raising, which is what's happening, with mining in general right now. It's been very, very low volumes across the board and just not enough excitement, in private placements and financing. Then what happens is, you have to
Your
raise
stock
money.
is your currency.
Then you're stuck. Exactly. Your stock is your
like
currency, and you have less and less of it.
Yeah, it's like your Fed, the Fed. They
Yeah,
can print up
the more you
print up
print, the
shares.
less
Yeah,
value. Exactly.
yeah, and you could
That's
try and
exactly it.
control it with restricted, but even that becomes free trading
It does
eventually.
eventually. Yeah.
A mining trader that I know said, Dale, the sweet spots for these companies is when they're in exploration or a producer, and the trouble comes when they're building out the mine. That's when you really don't want to own these. You agree with that?
That's probably right. Yeah, I like to get companies when they're a little bit earlier than, we're about to produce our first bar of gold. My dog completely agrees. He invests in miners as well. That's why he's very emphatic about all of this. So
I had one of those as a trading assistant.
yeah, there you go. We say that everything that can go wrong in mining will go wrong in mining. And usually
Okay.
when you hold the stock up until production, you know, sometimes you have situations where everything works out right, but that is really the exception. Most projects, they have cost overruns, they are late, there are issues. And so the longer you hold out, then the more risk there is, for sure.
Okay. I don't know where I got these micro cap silvers. Silver's been pretty hot. Silver and gold have really come to life in the last month since the dollar turned down. You know any of these companies?
I recognize some of the names. Yeah, I do recognize
SilverX?
some of SilverX. So SilverX is a company out of Peru, and they had an issue where they wanted to buy a project that nobody else was able to make work, and they tried to buy that project. And when they were doing their due diligence, they had to backtrack and say, actually, we're not going to take a stab at it, like it really is bad. And then they had to go back to the drawing board. So SilverX is a small company, and they have small operations. They do want to grow through acquisition, but in order to do that, they need to basically raise their market cap to a point where they're going to be able to finance their expansions and acquisitions as they wish, because their market cap is too small for the expansions and the financing. They would have they would have to dilute too much in order to expand in the way that they're planning to.
Okay, I mean most of these stocks, including Montage, you have to make an appointment to do a trade, because you just pull up what happens intraday and you just have dots. Okay.
Yeah, it's super thinly traded.
Yeah.
Yes. And right now, what's happening right now is that mining stocks are very low volume. So
Okay, even in things
also
like
seasonal.
B2 Gold and all of them, they're still not getting the flow.
Well, there definitely be a lot more volume in those producing majors. But overall, across the market, we've seen a tougher financing environment and also just very little volume. We also have a situation, Dale, where in Canada, especially for mining, instead of trying to make a company work privately, and then when they get to a certain point of success, listing them and making them public, it's actually the opposite. So it's really a venture market. That's why, the TSXV is called the TSX Venture. It's because they're like startups. And so what ends up happening is that they have lowered the bar for new companies to come in and list. And you end up having a situation where we have just tons of companies.
A lot of junk.
Just a lot, too many, way too many. And on the
this
other
one,
hand,
Santa Cruz.
Yes, Santa Cruz. I don't know exactly what's happening right now, but they have slid. They are a producer, and I've been actually quite I guess curious about what's happening to them, because they were doing quite well, and the price has slid a lot. I know that they had a little bit of trouble with their financials coming out. They had to push it forward, or push it back a little bit. And I don't know what is going on. And I don't know if with Santa Cruz in particular, we know the full story. I don't know if the full story is public. I don't know if they're having some production issues that we don't know about.
I just have one more, and then I'm going to ask you for names. How about Guantanamo?
Yeah.
Silver? You know this one?
I've heard of it, but I don't know enough to be completely honest with you. I don't know. I don't know if their grades are, making them profitable. I know that they're a small producer as well.
Well,
but
you nailed the uranium market.
I came here for Victory Lap.
Okay.
For uranium.
I think it's topping up here. Even
Yes.
Cameco looks like it's getting a little heavy. So with your newsletter, The Next Big Rush, you also cover, it might be the next big rush, could be a rush to sell, and because it's not a profit till you take it.
That's true. It's not profit until you take it. But there is a big gap. Now, here is the challenge, and something that I've been harping on for a few good months, Dale. The Sprott physical uranium, it paints a picture exactly of what's happening in the spot price. Right. Now, what we've seen is that the equities have not followed the spot price. Now, the question is, when are they going to? Yeah, UEC has done really, really well. And when you take a look, I think maybe a good indicator of the general equities in this market would be URNM. URNM will show you that we have hit, let's see, URNM. Yeah, that we had I think we had a high in November or maybe September 2021.
Pulling it up right now.
Yeah, I don't think this is, no, it's a different one. URNM. Okay. No, it's a different one. It's Sprott Uranium Miners ETF. So it's URNM in the New York Stock Exchange. URNM. Huh, it's weird how it doesn't show. Oh, maybe you're under stocks. I think you have to click on all.
Okay.
Because it's an ETF.
Okay,
there you go. Sprott. Yeah. That's the one.
Okay.
That's the one. Okay. So if you look at it, we're just now reaching the highs of November 2021. Yeah. Okay. Yeah. But if you take a look at what the spot price of uranium has done in the meantime, and
it's overshot.
It has way overshot. So when I look at the chart, I think on your own trading view as well. If you go to UX1 exclamation mark, that shows you the actual spot price of uranium. And with the actual spot price of uranium, you can see that way back in, let's see, November of 21, we were looking at, just under $50 per pound of uranium. And let's see.
Yeah, I mean, I didn't pull up the one you had, but these are Sprott.
Yeah, and so it reflects it.
But it demonstrates
reflects.
the fact that the stocks have not taken out the highs from
Absolutely.
21.
And so we were looking in 2021 at a high in stocks and a sub $50 uranium per pound of uranium spot price. Now we're looking at an $81 spot uranium, and the stocks are just now reaching those highs. And so now the question is, are they going to catch up and kind of close a gap, so to speak, an imaginary gap, because nobody knows where that tops? Or, are we going to find ourselves looking at spot price coming down? And this is when it really pays to know the fundamentals behind the uranium story. I have seen really great analysts that I really respect. I don't know if I'm as bullish as they are, but I've seen prices thrown around from 200 to 300 to even $500 per pound.
Wow.
Having said that, we have gone through the least amount of volume in the spot market for the last 18 months. That was November, and the price went up 10%. What we're seeing in the spot market right now is almost no volume, and any volume whatsoever really moves the price. And we're coming to the conclusion, and it takes a lot of research to come to this conclusion, but it's what we've come to. The order books for most producers are getting full very quickly, and there is nothing left for the spot market. The spot market is very small compared to the long-term market. And we're finding ourselves in a situation where there just isn't enough material to go around. And so the little bit of material that there is, the utilities that need to top up their needs with, uranium, they're going to a spot market that doesn't have enough material. So they're bidding the price up because they don't have an alternative. There's absolutely no alternative for uranium. It's not like,
so it doesn't take
silver, copper. It doesn't take anything for the price to continue to climb. And we see that it has become very much a seller's market. Case in point, very quickly. There is a very well-known South Korean utility that would come to the market usually with, a request for proposal and ask suppliers to bid on, their contract. And get this, if you were a supplier that refused their proposal, you would get onto a blacklist and they would avoid trading with you in the near future. They have put out a request for proposal, I think 2 months ago, and the floor of the proposal was actually below the current spot price, and the ceiling was about, I think, $90, right? So I think it was 58 floor and a $90 ceiling, and it went no bid. This was back in September to October. Completely no bid. So in short, everybody's on the blacklist. They can't trade with anybody. And I'm only, half joking about this, but the utilities that used to be able to get uranium for cheap are finally coming around and realizing that there is no more uranium that you can get cheaply. And it is very difficult, very costly to, turn on the spigot and just produce more uranium. It doesn't work like that. Can't be done.
It probably takes 10 years.
Yeah.
To get
and it takes the right
online.
people to be able to do it.
Yeah.
But we don't have many of those around.
Okay. Let me ask you this. You've probably been through, many Decembers as an investor. Do you think that tax loss selling or, for things that aren't performing. The uranium shares have done well, but, I don't think there's a lot of people making money in gold or silver shares, even though we've
100%.
had this recent run. Do you think we'll see some pressure on
Yes.
these issues?
Uh,
And
I
when's
think
it
we're already
over?
seeing it. I think we're already seeing it. I
Okay.
think by December, some people are able to come back into the market already. But I would look at silver stocks, I would look at gold stocks, and I would also take a look at copper stocks. Some copper stocks, haven't really performed. I can't remember any like charts off the top of my head that I could mention, but I remember taking a look at a couple of them very briefly, and they just didn't look good for the same reason. Gold and silver have been suffering quite a bit. And the thing with copper is that there has been some pressure in copper production lately. We have a mine out of Panama. It's at least 1% of global production. And the government decided to shut it down. There have been protests regarding the mine and, how they were treating the environment. The protests just grew bigger and bigger. And I'm sure that there were some political interests tied up to it as well.
Okay.
And they're shutting down the mine. I don't know for how long. So the situation also in Chile, Argentina is likely to get better, maybe, hopefully, fingers crossed. But yeah, the situation of supply and copper is one to watch going into 2024 for sure.
Okay. So, um, I get your stuff,
Mm-hmm.
and I want people to be able to, get it too. So this is where they go.
That's where they go,
Is
the
your
next big
website.
rush.
Next
Yeah.
bigrush.com. To read what I like about Fabi is that sometimes she actually goes to these sites and walks around them. And do you put in calls to CEOs, and or do you mainly talk to IR people that always are bullish?
I usually talk to CEOs. You would be very surprised at how easy to reach CEOs in the mining space are. And so, they approach me. A lot of them do read the newsletter. And it's really, it can go both ways. It's good to be able to reach them and actually, get the story from the horse's mouth. It is also a well-known fact that most successful CEOs in the mining industry are extremely good salespeople. And so
Okay.
you have to take that interaction with a grain of salt, because they are going to put on, their very best show when they're talking to you. But
That's what
absolutely, they're
Mark
very
Twain
easy.
said. What's a gold mine? It's
It's
two,
a
two liars standing
a
over a
whole
hole.
with layer on top of it. Yeah.
All right.
That hasn't changed at all.
Okay, so it's still the Wild West, and that's why you need people that dig in to balance sheets on these companies. It's not a pure play when you're buying a company.
Yeah.
You could uranium could skyrocket, and if you're in the wrong issue and they have a problem, you'll be watching uranium go up and your shares decline. So
There you go.
tough game you chose there, Fabi. You're
I
pretty
know, but
tough.
it's fun. I like the
Yeah.
thrill.
All right. Well, I want to wish you, great holiday season. Appreciate you taking time out every
Thank
few
you.
months to come and say hi to us, and really hope that everything you touch turns out to be a major strike
Thank you so much,
or a
Dale.
major vein.
I really appreciate it. And let's hope that gold and silver and copper are doing much better next time that we connect, and we can,
I think they're doing. I
celebrate
mean,
that.
gold's on the verge of a major breakout over
It really
2080.
is. And
Yeah,
I'll be honest with you, I wasn't counting on that. If that can be
yeah.
sustained, then it's going to look, the discrepancy between what companies have in the ground versus what the market's telling them is going to grow even wider. So that's even more exciting to me.
And I what kept me a little cynical until lately was the miners, but they've broken out. Here's GDX. I don't know what's going to do today, but look, that you have like a breakout over 30.
Mm-hmm.
Most of them have really performed well.
Yeah,
So
take a look at the
if you're-
GDXJ for even like more junior companies
Yeah, and
to see if they
and I
have
have
more
the
torque.
SILJ, looks
There
good.
you go. Mhm.
Okay, this is the best looking chart I have on the board.
FSM.
Fortuna.
Fortuna.
So you already have 50% gains here. I wouldn't chase it up here,
Yeah.
but buy any pullback towards the
If
130.
I'm not mistaken, they came out with like amazing financials. I could be wrong because you know there's so many of
Well,
them.
here was
It's hard to
earnings
keep
right
track.
here.
Yeah,
Yes.
yeah,
So that was, you know, the
that
market
was it.
it bottomed before any of these other ones did,
Mhm,
because
mhm.
if you look at even Majestic, it's breaking out of a falling wedge.
Yeah.
They all look good, Fabi. Do you know this one?
Which one
Believer?
is that? Caliber Mining. So they used to be somewhere in Central America, and I'm not sure if that's
Okay.
changed. And so I haven't followed them
It might be
for a few
Nicaragua.
years. I
Yeah.
think it was Nicaragua, but I don't know if it still is because I had a feeling that they had moved on. So I'm not really sure.
Okay. Well, thanks so much for being here.
No problem. Thank you, Dale. All the best.
I really, and I'll get a hold of you later and we'll schedule something for next year.
Let's do it. Count me in.
All right. Fabi
Yes.
Lara, everyone, follow her at the Next Big Rush. Go to her website and read her stuff. And that's going to be a wrap for Thursday, everybody. Have a great day. Don't just count your pips, count your blessings. You could join the team in 18 minutes on the morning edge. Adios. You're very welcome. Fabi, they're thanking you.